Good morning and welcome to the Life program. This is Rachel Hugenberg. I am the hostess here and one of our librarians. And this morning, I'm really excited to have with us Professor Jennifer Heller. She's an accounting professor at Lone Star Sci-Fair. She's helped loads of people with their taxes. And I know with everything that's recently happened, the fact that, April or possibly not April is coming up on us. So asked her in and she was more than willing to come and join us to talk about taxes and to answer any tax related questions that you have, because I know it's everyone's favorite time of the year, tax season. So Jennifer, if you would.
Yes. Thank you so much, Rachel, for that lovely introduction. And yes, I do help. Normally, I'd be helping y'all in person. This year, I'm not able to, so I'm happy I can at least speak with you virtually for this next hour. I'm going to be sharing slides to kind of assist me in our discussions as we go along. Please feel free to ask questions as we go, because those can open up more topics. I won't be able to cover everything, but I will be able to cover some. So I'm going to go ahead and share my screen. Let me do this, share.
And please keep in mind, while you all are muted at this point, because we get feedback issues, you can post questions in the chat and I will moderate and ask them as we go.
Yay. Okay. So we're talking about filing taxes in a virtual world. Some of you may still be filing by hand, or some of you might actually be using a computer, so you'll probably have some questions. So here are the major topics that I will be covering today. The first will be tax relief for storm victims. That might be you. And when I say storm victims, I'm talking about what we just experienced last week, Winter Storm Uri. After that, then I have multiple hot topics related to pandemic stimulus payments and any other pandemic topics. So we have a lot of special to us because of the pandemic. So I'll cover all of those. Then I'm just going to touch on some other changes for 2020 tax returns, kind of minor. And then lastly, how do I file? How can I get free tax help? Along the way, questions that are outside of these topics, and that's fine. At the end, we will have a Q&A time, and I'd be happy to answer or try to answer any questions you may have. All right. So to begin with, first item, we just went through what we call Winter Storm Uri, and it is important that this particular storm was named. Because it was named and it was declared a disaster, we now have some new benefits. Number one, this just passed, hot news off the presses, which Rachel already knew about, is any of us here in Texas now have until June 15th to file your individual or business tax returns. You also have until then to make your payments. If you have had to pay exorbitant fees to your plumbers and don't have the money necessarily to pay with your tax return, you can wait. So that is good news. There is a location on the irs.gov website. The link is here on my slide. And I will make all of these slides available to Rachel. So if she wishes to post them as well, you will have access to these so that you can find this link. So you don't have to panic and try to write this huge long thing down. But there is a place where you can find out more additional information specifically. But the key is we don't have to file until the 15th or pay, which is kind of great. In addition to that, let's see, what else did I want to say here? If you're a business owner, this could even include payroll tax deposits. If you had them due like on February 11th and before February 26th, Any penalties you might have because you paid in late will be abated. So it can be just any number of things. So please check that out. Does anybody have any questions specifically related to this immediate relief? Are we saying anything?
Okay, and we're watching for the chat, and not at the moment, but I'm sure more questions will come up as we go.
All right, of note, in addition to this, I didn't make a slide for it, but related to the winter storm, if you had damage during this storm that ends up not being paid by insurance, so it's your out-of-pocket damage, keep good records of all of your out-of-pocket for your damages, because you will be able to claim those as a casualty loss on your tax return in 2021. Because this was a named storm, we're very limited as to how we can take casualty losses now, but because this was a named storm, we can. So make sure along the way you're just keeping good records. Just like when you're fighting with insurance companies or whatever else, use good estimates, fight for what is yours, and then whatever you can't get reimbursed to you, claim. I'll also note if you were getting FEMA assistance, to the extent you're getting that, I don't think you can double dip and also get a deduction. So you may have questions on that. I'm not sure, but just be aware. If getting some sort of cash, generally you can't get a deduction. So unless it's a loan, then it's still out of your pocket. If it's a loan, then I believe you can. Any questions on that, on what to think about for 2021?
No, but it's great to know that everybody who had pipes bust can, apply for a little bit of a cushion.
Yes.
Based on this. So that's a relief for a lot of folks.
Okay. Excellent. Okay, so that's just related to what just happened to us, and I hope everybody came through unscathed. I'm impressed that you even have internet. I know I still have some students who are just now getting internet back. So, so let's talk about the pandemic stimulus payments, because everybody's kind of worried, how will this work on my tax return? So, number one, stimulus payments are not taxable. That's number one. Okay. If you did not receive one or of your stimulus payments, you file your tax return, you can also then receive your stimulus payments then as a refund. So it would be like a credit against your taxes owed. Okay, so you can claim it on your 2020 tax return. There is a catch, like there is with everything. Our pandemic stimulus payments still need to be reported on your tax return. So on your tax return, you'll have to show, yes, I received my payment. I believe it was 600. That's terrible. I don't remember exactly how much they were.
1,200 and 600.
1,200 and 600. That's it. Yeah, 1,200 and 600. So it was payments up to 1,200 for each eligible adult. And yeah, and then the next one was 600. If you had as well any children in your household, you may have received 500 then per child as well for any children under 17. So all of that, you're going to report on your tax return, and then it will be compared, and there is what we call a credit then that it will compare it to. So you're entitled to a credit for the stimulus you were owed. So if you've already been paid, you effectively were prepaid for this credit. Some people didn't receive theirs. I'm aware, at least one friend of ours, they moved right before the first payment came, and that payment just never did get to them. So they're going to have to file a tax return to get that first stimulus payment, and so it'll show up on there. Second item is if for some crazy reason your income was significantly more than your tax return in 2019, seems unlikely. If you were not eligible to receive the stimulus payments and you did receive it, then it may be that you have to refund some or part of it back. But that really has to do with the eligibility. And I think probably most people listening to me, that's not going to be an issue. Because all of those payments were based on our tax returns that we had prior to all of this. So I think that pretty well culled out any problems. Okay, I'm going to pause. Are there any questions about this?
Okay, so we do have a question from Olivia Garza, and give me just 1 minute. Okay, you are unmuted. Go ahead and ask.
I just wanted to ask about the children and the college age kids between those brackets, 17 and up. Mine are in that bracket, and of course, you know, we didn't get anything other than for me and my husband. How would that, how would we claim that?
You don't.
Oh, okay. That was
Yeah. Yet college students and elderly relatives didn't qualify for stimulus payments if they were part of the household. Yeah, there is no exception on that, unfortunately. Yeah,
Well,
I understand. Yeah, I have a college age student as well, so I hear you.
I've got 3.
Yeah. So, oh well. Yeah. That was a good question. There may be other people who had that same situation.
Shaheen is asking, can we contact the IRS if we did not get the stimulus of $600? I did, but not too successful.
Yeah. Really, your best course of action is to go ahead and file your tax return as soon as possible and get your money as a refund. Okay.
Okay.
So you can claim it. So what'll happen is you'll put on your tax return how much you did receive. So you didn't get your 600. So you would just show whatever you did receive, the 1,200, I assume. And it knows, they're aware then that we were in 1,800 if you were single. And will show up as a credit on your tax return and it'll offset your taxes. So you'll get that cash as a credit against what you owed in taxes, if that makes sense. Yeah.
She says thank you.
Oh, okay. Okay. If I need to clarify anything, please, you know, sometimes I'll start talking tax talk and people may not know the language I'm using. I have to be careful on that. Any other questions about the stimulus? I know that is just high on your minds. So there will be a place on the tax return to be able to report that. And then this new credit to offset that. Okay. What about all these other pandemic topics? We have, I'm going to be talking about tax on unemployment benefits, the additional child credit for lower income earners. I'm going to talk about emergency withdrawals from retirement accounts, the suspension of the required minimum distribution from like IRAs and other retirement accounts, special provisions for flexible spending accounts related to the pandemic. And then finally, if you're a business owner, some more than just net operating loss changes, but other things to consider if you're a business owner. Okay, so let's start with unemployment. Some of you may have never gotten unemployment benefits until this year. I mean, it's just the pandemic may have finally hit you, or maybe you managed to get through 2019 and then that was it. 2020 just nailed us and couldn't get any further. So just so you understand, unemployment is taxable on your tax return. Wah, wah, wah. You should have by now received then a 1099-G. In this case, it would have been from the Texas Employment Commission here in Texas. I'm assuming everybody tuning in is living in and working in Texas. So that is our state entity, and it would have been on a Form 1099-G. So you'll be reporting it as taxable income. So If you're receiving unemployment, it may be that your income then that you're earning is not necessarily even throughout a year. Some people may not be aware, but we have to pay taxes more than just on April 15th. We really owe taxes throughout the year evenly as we earn our money. That's generally done through withholding on our wages, but unemployment won't necessarily have withholding. So as a result, we may be what's called, under withheld for our taxes, and sometimes we may be subject to penalties. In the past, the IRS has waived underpayment penalties for filers after major disruptions. So far, there hasn't been an announcement for waivers for 2020. Who knows? Politics can play crazy. So who knows? That could change. But right now, as far as I know, we could be subject to some penalties if you are under withheld. So any tax payments made then after deadlines, but before April 15th due date, then help reduce these penalties. So now you're kind of going, well, but wait a minute, I'm in Texas, I don't have to pay till June 15th. I'm not sure how all of this interacts, to be quite frank, because this is also new. I would just encourage you to make a plan. If you don't have the money, just start squirreling it away, and don't let small penalties ruin your life. Don't let it, worry you. There are tons of payment plans if that's what you need to do. I mean, if you don't have the money, don't let that prevent you filing your taxes, because there's vast more penalties for not filing than not paying. They will work with you on paying, but if you don't file, that's when you kind of get into a lot of trouble. Any questions so far on that?
Not that I'm seeing.
Okay, and that's just on unemployment. Okay. For child or other dependent care credits for 2020 and 2021, the maximum child tax credit is $2,000 for each child under age 17 at year end. So that is a bump. Yeah. For any dependents age 17 and older, such as college students or elderly parent, the tax credit is $500. So Olivia, you will get $500 then for each of your college students. That won't fully replace the repealed personal exemption for many households. So many of you are still accustomed to the old way of doing taxes where we had exemptions. As a reminder, we don't have those right now. Instead, our standard deduction was doubled. And I'll be addressing that later in our program, just as a general, hey, how do we file our taxes and how does it kind of work now? So just know that some of these credits were increased, and then that standard deduction were increased to make up for the fact that we no longer have these exemptions. It really kind of makes filing easier, because then it's one less thing to kind of hassle with. So as a tax preparer, I'm not terribly unhappy with it, but as math goes, it can affect a lot of other individuals. Any comments? So you'll notice here, though, in December 2020, Congress did pass a pandemic provision allowing these families to claim the refundable portion of the credit based on either their 2019 or 2020 income. So it is a big deal. This particular credit, some credits are not, most credits are not refundable. Refundable credits kind of act like welfare, much like our stimulus. So stimulus would be an example of a refundable credit. So if you didn't get all of your stimulus payments, you'll be filing for that credit and you will get your money. Even if you owe zero taxes, you will get all of that back to you. So when I say refundable, it means you will get all of it. There's no limitations to how much you owed in taxes. Good news is you can file based on either 19 or 2020. So I guess you choose whichever one works best for you. If you fall into a low or moderate income earner, you may be eligible then for a payment of up to $1,400 per child for that child tax credit, even if you don't owe income tax. So that's that refundable portion of the $2,000. So that's that can be extremely helpful. You may be cash poor at this point, depending on your employment. So any questions on this? That makes sense. Okay. All right. In order to get by, many individuals may have made emergency withdrawals from their retirement accounts. Yeah, I see you shaking your heads, and that is not unusual. It kills me when people do that because it really does hurt your returns, but sometimes we have no choice. So Congress has allowed taxpayers affected by the pandemic to make withdrawals of up to $100,000 without incurring a penalty. Because if you do withdrawals normally early, there'll be a % penalty on that withdrawal. So if I took out 100,000, I would have paid a $10,000 penalty. It's a lot. So that penalty is gone. But that doesn't take away the fact that the amounts you may have withdrawn will be taxable on your tax return. But it's only to the extent that you keep that money. If put any of that money back into your account, then that portion will not be taxed. Ouch, right? Do you have any questions?
Yeah. You do actually. A question about the stimulus report. When filing, if I filed my taxes through TurboTax tax and feel sure I would have answered yes to receiving the stimulus check, why don't I see it on the document that is generated at the end? Or is it called something different on the return document?
On the tax return, you're going to see it on the credit side as the rebate. I think it's like stimulus rebate credit. And so it's just like a calculation and it washes. So you're not really going to see anything because it's going to net to zero. So if you received, let's say 1,800, and so your credit would be at 1,800, it washes out. So your tax return, you won't see anything. The only time you would really see anything would be as a credit if you were owed more, or you would see it as a payment back to the government if for some reason they overpaid you. Makes sense? So yeah, I don't know that it'll say stimulus payment. That is somewhat confusing.
She says thanks. That's a relief because I know a lot of us looking at the tax forms and trying to figure out, okay, wait, what does this actually mean?
It is confusing how it looks on the tax return. I mean, I could go on and on. And I do encourage you all to use software like a TurboTax or other ones like I know, Rachel, you mentioned H&R Block. Those are two really good ones. There are other ones as well. And I'll be referring to where you can find lots of different softwares. I will say this, if you find a software, it's generally good to continue to use the same software year after year because you can roll your information over year after year so that you don't have to re-input it. So that can be a benefit. Yeah. So all of those work really well. So if any of you have done early withdrawals, know that you can spread then that taxable income though over 3 years. So it won't sting as much because that's what can be a lot of money depending on how much you had to take out. So your taxable income, instead of it all hitting in 1 year, it'll get spread across 3 years. So that can reduce your taxable income so your taxes aren't nearly as high. At like 10%, maybe 20% as opposed to something really super high if you took out a lot. Okay. Those of us, I'm not yet, any of you that are retired may be at a point where you are being required to take distributions out of your retirement plans. So normally, under normal law, those plans that we've had, our IRAs, our 401k plans, have had earnings that were tax-free. We have until we are 70 and a half years old to let it sit there and earn income tax-free. After 70 and a half years old, we're required to take a certain amount out based on annuity tables. And so it's published by the IRS as far as like based on your age, how much you have to take out of your account. Usually you'll get an announcement from, your bank or your 401k going, hey, you have to do an RMD, and a lot they'll calculate it for you based on your age. So then you'll have to take that payment, and that would be taxed. This year in 2020, they suspended the requirement for us to have to take that money out, because what is that doing? It's causing us to incur, we're having to liquidate when the stock market was crazy. And so thank goodness they said you don't have to do that. I'm really glad of that. When I helped my mom with her taxes, we were glad we didn't have to take that money out. Also, you may not need that, and so you're not wanting to incur a higher tax bill at this point. And so that can help retirees when they're managing and only taking out what they need as opposed to what they have to take out based on their life expectancy. So depending on how old you are, as we get older, that required minimum distribution gets bigger and bigger and bigger. So it may be as well, some young people may also have RMDs if they inherited an IRA. So you may also have those as well. So young people could have those. So that was good news. You didn't have to do it. If you took it, I think we have till at least April 15th. You might be able to put the money back in and then not have to include that in your income. But that's if for some reason you had that extra cash and be able to put it back. Any questions about the RMDs and them being suspended?
Okay, so not seeing so many questions about RMDs. Lori says, this is good news. I will share it with my husband.
There we go. Okay. All right. And just watch, for 2021, some of this may get extended. At this point, it has not. Okay. As we all know, right now, Congress is in those smoke-filled rooms trying to decide, what they're going to do. They're still negotiating, so I don't even want to say what we may or may not have, because just because a committee decides something, until a bill gets signed, it can change. So just, be aware. 2021, we could have a lot of new things. Okay, so if you're fortunate enough and you are employed, you might also have a flexible spending account. There are different types of flexible spending accounts. There's some for health and some for dependent care. I'm addressing first the health one. So the good news is, if you didn't need to spend all of that money, those unused funds then can be rolled over. So these plans are made to where if you don't use it, you lose it. So these rollovers prevent us losing those funds forever, and they can roll over, so you don't have to, we didn't have to worry about spending all of it for no reason at all. So that might be a nice buffer. So if we need to spend it for healthcare in the coming year or two, it'll be there.
Okay,
So
is this the same thing as an HSA, Jennifer, or is that different?
It's not quite the same, but HSAs anyway don't have, I don't think, they never had the requirement to use it. So HSAs are for when we have large, expensive healthcare plans, which really most insurance now will qualify for that, since we had all the changes in healthcare. So any monies put into those plans, I do believe, and please verify, look it up. I do believe that we do not have to worry about rollover rules anyway on those plans. So the point is, you're supposed to have, it's like 10K or something, a lot that you can put in. There are maximum amounts that you can put in year to year into those plans, but the point of it is basically to have that large nest egg, because theoretically your insurance doesn't cover the small stuff, so that's supposed to cover it. So I'm not aware of any special rules for the rollover. We might have to look that up. I'm not certain. If I have time, I might look it up. If you have an FSA for dependent care accounts, lawmakers have upped the age to 13 for those carryover funds, because you may have your children at home instead of in childcare. So that means you put money in care account and then you didn't spend it for good reason. So your 12-year-old is now 13, which then wouldn't qualify for those childcare expenses. And so I think that's why they upped the age. So that then this year, 2021, if you then start spending that money, it will be there for you to spend as opposed to use it or lose it. That makes sense.
Mhm.
Any questions on that?
Okay, so I think we're having some technical difficulties here for a minute. Jennifer, are you still with us?
I am. Yes, I am here. I'm
Okay.
just trying to give you, I just want to make sure I allowed time. Oh yeah, can you hear me?
Yes, you
Okay,
went
okay, good.
a little pixel remix on us for a second, but you are fully back with us
Oh,
now.
it's probably because my husband also works for Lone Star and he probably just logged in. He is a tutor and he's working online today. So, oops.
Yeah.
So thank you for telling me that we had it spinning a little bit on my computer. So I'm going to take my video off so that I don't know if you can do that for me even. Rachel, can you like kill my video or do I have to?
I cannot. You would have to do
Okay,
that.
let me see if I can figure out how to do that. Normally I'd know how to do this. Let me
That's
see if I can get
right.
on here.
We should be okay.
There it is. Stop video. There we go.
Okay.
Okay, I'm stopping the video just so we'll have a better connection with my computer. That should
Of course.
Okay. All right. My next line item was about business owners. First off, net operating losses. So if you are a small business owner, you might have net operating losses. So during 2020, Congress made a series of tax law changes designed to help businesses weather that pandemic. And I'm going to give you some of the highlights. So under 2017 law, businesses were no longer allowed to deduct current losses from past profits. In other words, if I had a loss now, I couldn't carry them back and get a refund. They changed that in 2020 because now these small businesses, if they're going to survive, they need to be able to get the cash now. And so they changed it back. And so you can then go back up to 5 years. So 5 years worth of profits then for this year and get cash now. The way that would happen is if you would then file in a tax return to claim those refunds. So if you're a small business owner, you might be filing on a Form 1040 with the Schedule C, which means then you can file amended returns 5 years because of this net operating loss. So it's a special for that. So you can get that cash to be able to maybe keep your head above water before it's too late. Any questions on the net operating losses? So they removed that limit. Okay. A few other things for business owners. I think we've all heard about this. Have everybody heard about the Paycheck Protection Program? And then there's also an employee retention tax credit. So let's talk about the PPP. So that let's see if I can say this, Paycheck Protection Program was designed as a forgivable low interest loan to businesses that kept employees on the payroll. So that will not then be taxable. It won't be treated as taxable income, but the Treasury Department issued a ruling that businesses forgiven loans couldn't take the normal for expenses tied to these loans. Bummer. That ruling would have negated much of the benefit of loans tax-free, but the lobbyists prevailed. And in December of 2020, Congress overturned that ruling. And so now businesses can take deductions for those payroll costs just like they would in a normal year. So if you were not aware of that, you can do that. Because we're in the state of Texas, assuming you're only doing business here in the state of Texas, you'll be fine. If you are filing in other states, you may have additional state income tax ramifications with this. So talk to your tax advisor on that if you've gotten into the weeds on that. In addition to this PPP program, Congress created and expanded the tax credit for businesses that retain employees. So you can either have the loan or you could have the credit. So if you took the loan, you can't do this credit. If you did not do the loan, then you can take then the tax credit. So the employee retention tax credit. So what it does, it affects, this credit will act as a wage subsidy. It will for 50% of wages from March 13th, 2020 through the end of the year, and 70% of wages paid in 2021. So this is kind of ongoing. And this is all the way through June. So they're hoping, I think, that business will pick up by June. So businesses can receive up to $5,000 per employee for 2020 and up to $14,000 per employee in 2021. So how do they qualify? It's just business generally eligible to receive that credit if they suffered a quarterly revenue decline compared with 2019 of 50%. So if your revenue declined 50%, then you're eligible for these credits. So I imagine it was a lot of restaurants probably would qualify for this, a lot of small businesses. I just think of all the small businesses that we see in the strip malls that you know, we just aren't out like we used to be that would qualify for that. Any questions? Nope, no small business owners on here, huh? Okay, well, we're about to hit other stuff that are not related to small business. Okay, other changes. All right, our tax brackets, like every year, have been adjusted for inflation. So they will be just a little bit different. Currently, our tax brackets range from 10% to 37%. Our standard deductions for 2020, and I will type this on here. So for 2020, because I didn't put it anywhere else. So here, let me go ahead. So for 2020, our standard deduction will be $12,400 for single, and let's see, $25,100 for married, and we're assuming this is married filing jointly, and I'm sorry, $24,800. Got the wrong number here. Lost my mouse. Okay. Where is it? How did I lose my mouse? There we go. Oh, because it's so dark, I couldn't see it. There we go. Okay. I'm like, where did it go? Okay.
It's good to know
Anyway.
what these are, though.
So let me try that again.
What do these deductions actually do? Because I know they're not something that we receive.
No. So how do we calculate our tax? You'll have taxable income, and then it would be less the higher of taxable, higher of your standard deduction or your itemized deductions. Most taxpayers will not have itemized deductions of more than that 12,000, or for married, I'm sorry, 24,800. So we have 12,000 again, I'm gonna put that on there, 400. Or if you're married, it would be 24,800. That other number I had on there is if then, that other number was for 2021. So 2021 will be a little bit higher, it'll be 12,550 for singles and 25,100 for married. There are some other additional ones for head of household, as well as if you're a retiree, you get an extra benefit if you're over 65. So I think they bump it a little bit. But most taxpayers now, we don't itemize. In 2021, you might, though, if you had substantial damage for this the storm. So that might be the one time, and that's why I said make sure you keep really good records. Still, boy, I really hope that you didn't have this much damage. I hope you didn't have more than $12,000 in damage that you had to do out of pocket. I hope you didn't have more than $24,800 in damage. I wouldn't wish that on anybody, but if you did, then you can itemize and you can deduct it that way as a casualty loss. So this is just how we calculate our taxes. After you take that taxable income, then that then generally then is your taxable income. And we're assuming, I'm kind of skipping past the myriads of small deductions we have pre-AGI or whatever, but most taxpayers, this is kind of how it works. So then that comes to our taxable income number, and then that's what we're taxed on. And then it's always then less credits. Okay, and these credits would include that child care credit. It could include, if you were school, it could be credits for continuing education, the lifetime learning credit. So those credits then act like cash to go against the tax that you owe. So yeah, I'm sorry, taxable income, really then we calculate then our tax. And then it's less our credits. There we go. Does that make sense? Any questions on that as far as like how we generally would calculate it? And it's really changed a lot because a lot of you may have been itemizing all these years, and really under the new law, you probably won't be.
Okay, so we do have a question. Any changes from last year for business and the home deductions?
Business and that, when you say home deductions, you mean mortgage interest? There is no change on mortgage interest on the itemized deductions. There is no change that I'm aware of on that. Medical, I think there is a small change in medical.
They are saying no, but for office space, etc.
Oh, for office space. Just like before, office space, and I wish I'd looked this up. There is an easy way to take a deduction for office space in your home. You would do it based on square feet. So like I'm sitting right now in my home office. I caution you, in terms of those rules, most of us may already still have an office somewhere else that we're just maybe not allowed to go to. So we're using our home office. If you take that home office deduction, you effectively are also taking depreciation. When you do that, you're effectively converting part of your home to a business asset. So then eventually when you sell your home, a part of that, which normally would not generally get taxed, might then the gain for that teeny part that you got the deductions for, then you'll end up with some taxable gain. So unless you really need the cash, I caution against doing that, only because you can have long-term ramifications that you really didn't intend. I am not aware, and I feel terrible. I'll see if I can look up if there's any additional stuff on home office. The rules for home office are very specific as to when you can take it. You're really not supposed to have other office space available to you. It really needs to be your home office, and that's that. So like I can't take this home office, and I wouldn't choose to anyway. Because I could actually go on to campus because I am teaching on campus, but they just discourage it. So I'm not aware of any changes on that. So if you were already doing it, it shouldn't change from what you were doing previously. I hope I answered your question. Anything else on that? Yeah, that was a good one.
Don't think
Keep
so,
it
but
up on that.
that's something I've wondered too about stuff you've had to buy or work from home.
Yes. Anything that you've had to buy for work on home, unfortunately, we're kind of out because it used to be it would be a miscellaneous itemized deduction, which really now they number one, it's been gotten rid of. So there is no deduction for unreimbursed business expenses. So if you're a W-2 employee, it's just between you and your employer. If you can get them to reimburse you, it won't be taxed, but you don't get a tax deduction. Does that make sense? So you're just going to have to negotiate with your employer. Yeah, it's funny you mentioned that because every time I print something for work, I cringe because it's expensive to print. It's the ink.
That is very true.
Yeah.
They're saying that yes, you've answered the questions. I can email you if I need to. Thanks.
Yes, and I'll make sure that all of you have my email. Now, I'll do my best to answer your questions, or I may send you to another expert. If it's something I can address, though, I promise you I will try. So, okay. Another item that I have here on my slide is cryptocurrency. So we've kind of heard a lot about that. Cryptocurrency is something new. If you've been dabbling in the markets or you've invested in cryptocurrency, it is high on the radar for the IRS to tax you. They're trying to strip away, any excuse for millions of cryptocurrency owners who think you cannot ignore the tax rules anymore. On page 1, right underneath where you have put your address and everything else, I think it's right after you say whether you want to contribute to the presidential campaign fund. There's like always a question on that. There's a question as to whether you are a cryptocurrency owner. So it's moved that question to the front page, and the question says, at any time during 2020, did you sell, receive, send, exchange, or otherwise acquire any financial interest in any virtual currency? So number 1, you need to answer that question. Number 2, answer it truthfully. If you answer it and don't have ethics and you say no when it was yes, they will come after you hard. Okay. So cryptocurrency owners who fail to answer that question are untruthful. You're going to risk high penalties should the IRS audit you, and it will be hard ignorance of the rules because it's right there on page 1. You can't say, "Oh, I didn't know." So what is it about cryptocurrency? Well, cryptocurrency is not money. So they're treating it like any other piece of property. So if you pay for something with cryptocurrency instead of normal cash through credit cards and PayPal and all those other ways that we pay, you actually are doing 2 transactions. You're selling your cryptocurrency and you're going to have a long or short-term capital gain or loss, and then you bought whatever item it was. So if you use Bitcoin to buy coffee, it isn't like using cash. You've actually just sold your cryptocurrency and then paid for. It's like you sold it, they gave you money, and then that money went to pay for the coffee. Any questions on that? Anybody like dabbling in cryptocurrency? Okay, just want to make sure. Some of you might be wanting to plan in terms of estate and gift taxation. A couple of years ago, with our change in our tax law, they doubled the exemption for what is tax-free for estates and gifts. So it's a very large number. I don't know, do I have that on my next slide or not? No. It is at this point $11.58 million per individual for estates. So if your estate is 11.5 million or less, you're not going to be, that estate will not be taxed. It will go tax-free then to your heirs, which is great. If it's married couple, it's 23.16 per married couple. And that's because we're assuming there's a surviving spouse. So that's supposed to cover so that when they receive that other half, they're not getting whammed. So there's an inflation adjustment then for 2021. It's going up then to 11.7. The thing is, though, and this is important to know, is that yeah, so these exemptions will lapse after 2025. So if you're wanting to do gifts, you might want to try to do that early then, so that you're exempted. You can find a way to do a gift outside this. If you're in that kind of situation, I'd say consult a tax person to kind of help you to make sure you do things right so you're not taxed or whatever. So those exemptions that will lapse. So right now, most people aren't worried about their estates being taxed. I know this can really hit people that are small business owners because they might have a whole lot of assets that would be included in the estate, including like, you know, a little bit further out there, like Waller or whatever. We might have some people who are tuning in where you have that big farm and you kind of worry about that. So don't. Any questions on that? No? All right, I'm gonna stop this annotation. So what about other stuff? How do I file my taxes? So some of you may have been relying on us here at Lone Star to kind of help you. There is a place you can go still to get help, both in person and virtually. This link here will take you to the website, which shows you how you can file. So I'm actually going to click on this and show you what it looks like. Here we go. Let's see if it pulls up. Can y'all see that? So if you want to file, good. If you want to file your federal taxes online for free, if you click on that link, then this will help you then do it. So you can choose any number of free software, so you don't even have to pay it if your income is $72,000 or less. So if you go here, you can choose, there's tons of different softwares. You can pick whichever one you want. There's no rule. So all of these software companies are partnering with the IRS, much like, you know, I think even TurboTax might be on here. So you can choose and then use their software. If your income, though, is beyond that, you can still use the IRS forms. This, though, all it is like a PDF file where you're typing in effectively the numbers. So this would be if you are one of those individuals who still want to figure out all the numbers yourself and calculate everything. If that is you, as a reminder, all of the forms have instructions. If you want to look at the instructions for a form, so let's say I want to look at the 1040, I can just type in 1040 here in irs.gov. And lo and behold, there's my form 1040 and then this normal other schedules that kind of come with it. And the instructions on how to do it. So if you're looking at a line item, the best place to go is to actually read the instructions. It may take you a while, because the instructions do have a lot. So here it says about, this is, oh, here it is, instructions. So here are the instructions for the form 1040. And the instructions then for Schedule 1, which the additional income and adjustments to income used to be on the front of our Form 1040. What they did a couple of years ago is just pull that off and create these new schedules, 1, 2, 3, 4. I think there's 5 of them, where we can put more detail because it just was too much to cram on one page anymore. So that's what these scheduled numbers are about, because everybody's like, well, why do I have these numbered ones and then I have these lettered ones? The number ones, think of them as the detail and think of the 1040 as your summary schedule. You don't have to have a number on every single line. Just use what lines are appropriate to you. You may not even need to use a Schedule 1 or a Schedule 2, and that's okay. These credits, though, more than likely, let's see what that form looks like. So if the credit form, here it is. Our non-refundable credits then are listed here, and those refundable credits then are listed on here. First one being net premium tax credit. So this has to do with if your insurance was through what we call Obamacare. If you had part of your insurance paid through Obamacare, if you received more payment than you were entitled to based on the calculations in your tax return, you would then either owe or get back, depending if you were underpaid. That's what this premium tax credit is about. Let's see. I'm not seeing any other ones I've been talking about on here, so it must be on page 1. So let's see, just on the 1040 itself, just so y'all can kind of see what is the formula. So here you can see our 1040. Here is that cryptocurrency question right here. So make sure you answer that. If you had any wages, you'll be reporting it here on line 1. If you sold that cryptocurrency, it's going to come through here as capital gain or loss on selling that cryptocurrency. So you notice then Schedule 1, whatever total you end up on that Schedule 1 ends up here. So there's that detail schedule, and the bottom line then goes here. If you have any adjustments to your income, it's also coming from Schedule 1, and those amounts that you're going to subtract will end up here. As well, big news, we don't have to itemize charitable contributions. So charitable contributions, if you take the standard deduction, can go here. So if you gave to charity in 2020, you can still take charitable deductions. So that is huge. A lot of it, especially this past year, maybe churches were just in so if you made any of those payments, make sure. Here's then where you'll see that standard deduction or your itemized, which come from Schedule A. Here's where you calculate your tax. Ultimately, you have your tax. And so some of those credits weren't on that schedule. So you notice we have a listed here. And a lot of the other credits I was talking about are right here. Do you see line 30, the recovery credit? This is where our stimulus payments, then that credit would show up if you did not receive all of your stimulus. So you would see it there on line 30.
Good to know.
Yeah.
All right, so we are a little close on time.
I didn't even realize. I am so sorry. I will make sure this gets that we have local programs that you can then receive help. And yeah, Rachel, take it away.
Okay, so if you have any questions for Jennifer, do feel free to say so. You're getting a lot of gratitude in the chat for the very useful information and the help that you've given us today. I know I learned several things that I kind of wanted to know about taxes and how they work. So that's actually really useful. I was behind a couple of years. So not on my taxes, just on how they've changed. So it's good to know. And she's just put her email address here if you want to send her questions. I believe that you are welcome to do so. And best of luck with doing your taxes. I'm not a math person. I enjoy using the online softwares. It makes it a lot easier for me. So With that in mind, this week has been awesome, and we've learned a good amount about finances and taxes and financial literacy from Jennifer Heller. We really appreciate you coming out and being willing to do this. Next
You're
week,
welcome.
we are going to be having our wildlife program, where Channing Green, local wildlife expert, is going to come and talk to us about different types of Texas wildlife for World Wildlife Day. So I'm really excited about that. So do tune in on Wednesday at 10 next week, and we will see you then. Thank you so much, guys.
Thank you so much, everybody. Help you.
Thank you so much. You were wonderful.
Yes, and we will also be posting this recording on our YouTube in case you want to re-record it or access it at another time. All right, everybody. Thank you so much.